You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, Veterans Day, 11th day of November, 2019. And in honor of all the veterans in our office, in our audience, and this one in the office, for everybody. The New York Stock Exchange did 2 minutes of silence this morning. We're short on time, but let's just take at least a few seconds and reflect on what it means to be a soldier. I'm sure everyone in this audience has known someone, lost someone close to them, dear to them, because of war. War, what is it good for? Absolutely nothing. That's the way the song goes. All right, it is Monday, new week. Now, if there was ever a day that I think everybody should have had the day off and the market should be closed, certainly I think today would be that day, Veterans Day, but markets are open, so here we are. Now, if you cannot see the screen, if you cannot see the chart I'm about to put up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, big reveal, something new, something you haven't seen before. Now you have. Once you see it, you can't unsee it. That's right, you're reading it correctly. As we approach our 10-year anniversary of the CFRN weekly trading zones, I could think of no more appropriate time to launch the CFRN monthly trading zones. As you can see, this has been under the hood waiting for us all along, and we finally caught up to it. We hit the zone. Now, this is November 1st. It's a 4-hour chart. Hit the zone, consolidate, consolidate, consolidate. And in one 4-hour period, we make a run to the zone overhead, more consolidation, back to the zone below, more consolidation, back to the zone above, and yes, back to the zone below, where we appear to be, once again, making a run at the zone above. Distance, 14 points up and 14 down, and 14 up and 14 down, and could be another 14 up here on tap. Okay, we are continuing our high-level battle at the top. Let's look at a daily chart. That would be this one. This one. Let me get all these fibs off so we can just see price for a moment. Let me pull this out for a moment. Okay. Last week, or week before, we measured the distance between this all-time historic high and this all-time historic high. About 60 points, I think it was. So a measured move of the same distance would take us to this little rectangle here. The shallowest possible retracement from here, if this is the time for the retracement, the shallowest retracement would be the BBC. After that, 24% Fibonacci retracement. Well, let's take a look at those. Let me put that. We're going to look at the whole move. Okay. From here to there. Now that puts the 24 just below these all-time historic highs and this high. Okay. Now what if we look at just the last leg up? We can do that. This would be just the last leg right here. Okay. Now, see the distance, or the difference between the 24s creates a nice area. Okay. Now, if we layer in the BBC, bull, bear cross, the BBC is right at this 24% Fibonacci retracement. Now, that's going to act as a magnet. Will we consolidate for a week? I don't know. Will we break and move higher? You know, it's possible, and we have to embrace all the possibilities. This has been a pretty good run without any meaningful pullback other than the initial one we got here. When we put in this low, we had 2 green days back to back. We hit the BBC, and when we approach it from below, we expect it to be good resistance, and it was. On the next trip up, we made it through, closed on the other side. That's an important day because the narrative changes. As long as price is below the bull-bear cross, we have to anticipate lower prices. But once we get above it, we have to anticipate higher prices. Now, technical analysis is not based on, well, we're due, right? And oversold and overbought, those are true conditions. However, you can stay overbought or oversold for a very long time. So we'll just continue to watch this. We'll trade what's in front of us intraday on our 30-minute chart. All of the alerts will continue to come based on whatever that 30-minute chart is telling us, but we can't lose sight of this big picture. All-time historic highs, 3 days back to back. What will today hold? If we sell off into the close today, and that's not a forecast or a prophecy, but if we do sell off into the close today, then I suspect we would find this area potentially by Wednesday. Today is a holiday again, so kind of some quiet holiday trade. Let's look at this volume. Let's see, Friday, November the 8th, we did just over 1 million contracts. So far today, we're 532,000. I think that puts us on track for about 750,000. Globex will open tonight, 6 p.m. Eastern, as always. And in just a moment, we'll get into last night's Concierge Trade Alerts, Logic 247. First, let me give you the numbers from around the world. And Michael says he's having a problem opening the webinar. So hang on, let me see if I can assist him. Maybe he needs to reboot. Hang on. Okay, all right, so I suggested a reboot. Let's see if that works for him. Now, numbers from around the world. Let's do it. These are the cash markets. We'll start here in the U.S. The Dow currently down 19 points. NASDAQ down 22. S&P 500 down 8.5. The Russell 2000 down 7. No movers, no shakers. Again, quiet holiday trade. In the commodity basket, crude oil down 36 cents, trading 56.88 last. Gold down $7.20, trading 14.5570 last. In the Asian markets at the close, Nikkei down 60 points, Shanghai down 54, and the Hang Seng, you ready for this, down 724 points. That's a loss of over 2.5% on the session. I'm sure that has to do a lot with the trade talks that are going on. And in the European markets at the close, the FTSE posted a loss of 30 points. DAX also lost 30. The CAC gained 4. Quiet holiday trade in the UK, and it's not even Veterans Day there. That gives us a red day in Asia, a mixed day in the UK, and so far, it's a big red radio Monday here in the US of A. At this point, I would say, let's go to Michael and get a recap of everything that happened in the live training room. While he's rebooting, though, we'll go ahead and just dive head first into the Concierge Trade Alerts from last night. We have two types of alerts. CFRN partners and passport holders have access to the Concierge Trade Alerts as well as Logic 247. Now the difference, the Concierge Alerts are based on previous price behavior. Logic 247 is based on current price behavior. Now, when the same important price in the same important area appears on both alerts, that always deserves a second look. So I'm going to bring up the concierge from last night. If you would like to grab a screenshot, get ready, because as soon as I find them, I'll pull them up right here. Okay. Here we go. Got them out last night, 7:20 p.m. Eastern. 5, 4, 3, 2, 1. Okay. All right, let's go to the S&P 30-minute chart. All right. Consider being long 30.94. And as we can see, that has not happened yet. This was Friday. We had a swing high Friday, 92.5. So the long trigger last night, 94, has not been touched. And as you can see, here's the opening candle right there. Put an arrow. That one. Okay. All right. So this is where we opened last night for Globex. We got back below last week's weekly trading zone at 86/87. And by the way, all of the zones that you see on the chart today, tomorrow, Wednesday, and Thursday are last week's zones. Now, partners and passport holders, they receive the fresh weekly zones every Monday morning, 6:15 a.m. Eastern. Once we publish them, they're carved in stone. We don't change them, massage them, manipulate them in any way. They're good for the entire week. Concierge Trade Alerts are good for the entire session. Once they're issued, they don't change. The weekly zones, good for the entire week, they don't change. And now, the new addition to your toolbox, the monthly zones, you figured it out, they won't change until the 1st of December. Okay? So we get back below this weekly trading zone. That tells us that price is now trying to get to the zone below. It hasn't made the trip yet. Not completely. We put in a swing low down at 74.5. The short side, 30.82. And that's going to be right here. Important prices, important areas are almost always tested. If we step back in time to Thursday night of last week, all of our traders were given the same information. Consider being short 30.82. On the initial trigger, we dropped to 77.25. That's basically 5 points, 4 3/4. 5 points at $50 per point. That's a $250 per contract move. We get back above the trigger. We trigger a second time, not much of a drop. We continue this retracement up to the weekly zone, which we expect to be good resistance until it isn't. Again, we trigger. This time we make the trip all the way down to the zone below. And when price approaches a weekly trading zone from above, we expect it to be good support, and it was. Good enough support that it sent it back up for another trigger, another test of the weekly zone overhead. Then last night on the Globex Open, we come back below the zone. We trigger. Now that's 2 sessions in a row, same number, 30.82. So on the first trigger last night, we made it down to 30.77, 5 points. Back above the trigger, and then down to 74.5. So from 82, let's just call that 75 and be conservative. So that's 7 S&P points at $50 per point, $350 per contract traded. And then the last trigger, which happened this morning on the 10:30 a.m. Eastern candle. A nice little 2-point drop, 30.82 down to 30.80. Back above the trigger. Looks like we could potentially trigger again. Now remember, when price got below this zone, the market is signaling us that it's trying to get to the zone below. So we get a leg and a retracement, a leg, a little deeper retracement. If we trigger again, and if we take out these lows, I would look for a move back to the low of the session and ultimately to last week's zone. Now, if you're wondering what's hanging us up in this area here, you probably don't have to think too hard, okay? Now, the weekly zones, I can't put them out until Thursday. Well, I can do anything I want, I suppose. I don't want to be rude. It is something for our partners and our passport holders, but we do share them with the entire audience, with the world at large, every Thursday, because if you jot the numbers down on a Thursday, they can help you Thursday night, Friday, Sunday night, Globex Open. See, in this instance, the numbers that I shared with you last Thursday, even though you might not have known last night's number, well, there it was. Okay, so I hope you're able to take advantage of that. If this green candle continues higher, we look for resistance at 86.87. Again, a secondary or an additional trigger here at 30.82. In fact, let's do a radio freebie. Consider. I did an analysis of crude on the daily chart for one of our passport holders, Alan, last evening, and I shared it in the Telegram channel. So if you'd like to check that out, and it hasn't triggered yet. We were only addressing the long side of the market, but I'll go over some of the details with you in today's show. All right, so for the S&P, we want to consider short here at this point. We've already triggered 30.82 multiple times, so we're going to look for an entry down around 30.80. Okay, consider being short 30.80 to 30.77 to 30.73. You should always trade in SIM. Any new methodology, any new indicators, any new clever idea that you come up with, always trade in SIM until you prove yourself consistently profitable with that model. There is just no reason to throw real money at the market until you've accomplished consistent profitability. Now, there's some that are going to tell you, oh, that doesn't even mean anything. You're trading in SIM. It doesn't matter. Yeah, well, it does. Okay? And that's said most often by people who can't prove themselves consistently profitable in SIM. They're the ones who say it doesn't matter. It's not important, because they're living life on a wing and a prayer and a hope that somehow if they throw enough money at the market, something will stick. And then they can break out those new business cards that say trader. I've been down that road. The old town road. It doesn't work. Hang on a minute. Oh, okay. All right. So Michael's still trying to get in, so he'll be here with us in just a few. So 30.80. Now, Vic, I see your question. Would you sell ES at 30.82 exactly? Are you talking about this radio freebie that says 30.80? Are you talking about the initial trigger or any of these triggers? What have we had? 1, 2, 3, 4, 5, 6, 7. Tell you what I'll do. Let me show you this, Vic, and this might help you out. This might help everybody out, so let's do it. I'm going to use this chart. Soybeans selling off. All right, we're going to go yes. And now we're going to go 5 minute. Okay. All right. And then we're going to put that alert, that 3080 alert, right there. Scrunch it up a little bit. See if I can scrunch it even more. There we go. Okay. Now remember this, let me show you the 30-minute again. This was the original alert last Thursday night, which took us through Friday. And then last night, that's just how the numbers came out. It's not often that it's the exact same number again, but it just so happens that last night it was. Now on the 5-minute, we're at 1:10 a.m. this morning. Okay, so Vic, in answer to your question, as we're coming down here on the 5-minute, prices below the BBC. Okay, which means we anticipate lower prices. So in a situation such as that, would you sell 30? Oh, I put that in the wrong spot, didn't I? It's 38.82. There we go. It is correct, right? Yeah, I know it is. Okay, 3082. All right. So on this trigger here, look what happened. We poked below the trigger. We pull back up to the BBC. We expect that to be good resistance until it isn't. So could you have shorted right there, right at the number, 3082? Absolutely. What I like a little better is this. Leg, retracement. It's on this second trigger that I would be most comfortable taking that entry. That leads to a leg and another retracement right to the trigger. And then we drop from 3082 down to 77.5. Okay? Once price gets back above the BBC, that's the market telling us it's going to try to get back above the trigger. It did. And then when price gets below the CFMA1, you see this trigger here. Okay. Now on this trigger, it's very different than this trigger, because here you're triggering down into support. At BBC, even though it didn't hold initially, right, it ultimately did, at least for a minute, and you have to anticipate that. So I would have loved that entry or that entry. This one I would not have taken because I expect the BBC to be good support. Okay. Here, we didn't actually get above the trigger, but we got back to the trigger. Unfortunately, that same dynamic is in place. This BBC very well may act as good support. Now, price gets below the BBC right here. Okay. I'm very happy to participate in that. Leg, and a retracement, a leg, and a retracement, and a leg. Okay. And we walk right into an area that we expect to be good support. Why do we expect it to be good support here? Because it was there. So until proven otherwise, like here, that's our narrative. So we put in a little double bottom there, triple bottom, back above the BBC, but we don't make a run at the trigger. Now we're just leg, retrace, leg, retrace, leg, retrace, leg. Then we're back above the BBC. Okay. Unfortunately, we have that same dynamic in place here. If you go short the trigger, you have to expect that BBC to be good support. And it was. And still is. Now, if we go sideways a little bit, this BBC rises. Once we get below the BBC, it'll be like this. Not like this or this. This, that's good stuff. That's strong medicine. This is bad medicine. So we're going to hope for just a little more strong medicine here. Okay? Hope that answers your question, Vic. Any other questions? Good trigger, good trigger. Not a good trigger. Not a good trigger. If we can get below the BBC before we hit the trigger, that'll be a good bingo. Okay. All right. So that covers the S&P. If you have any more questions, just type them out. I'll be happy to answer them. Okay. So here we sit. Now where's the BBC on the 30-minute? By the way, I'm building you guys a 30-minute BBC to put on your 5-minute chart. Right now, the 30-minute BBC looks to be at 3081. Okay, so if you go back to the 5-minute, where's 3081? 3081 is right here. Having that on your 5-minute chart or your range chart, it's going to be very valuable information for you. I think it's going to make life a lot simpler for everyone. Okay, so we expect support there, and we certainly expect support there because it was, and it was good resistance. Okay, all right, so that's the deal on the S&P. Let's go to the Dow. Last night's Concierge Trade Alert for the Dow. Consider being long, 27,660. We haven't got there yet. And the short side, 27,590. That was right there. Okay. So from 27,590 we took a trip right down to last week's weekly trading zone at 490/495, which we expect to be good support until it isn't, and it was. Caught a bounce, went back to test that zone again. It held. There's the opening candle this morning on Wall Street. See, we go to work way back over here. The rest of the world shows up here. Leg, a retracement, and a leg. Okay. So what happened here? We caught a nice bounce off the weekly zone. What stopped price dead in its tracks? Was it a matter of this support now becoming resistance? Or is there more to the story? This is such a picture-perfect example. Leg, zone support, bounce to the BBC. When you approach it from below, you got to expect it to be good resistance. Sends us back down to the zone. And this attempt, this is where the narrative changed right here. A close above that BBC on the 30-minute chart is the market saying, hey, I'm making a run at the zone overhead. Now from 590 to 495, 490, that's a 100-point move at $5 per point, $500 per contract traded. if you've earned the right to trade 10 contracts, and if you hang your hat with us, we're going to insist that you earn the right to first go live, and then second, to add additional contracts. You earn the right each step of the way. You earn the right to go live with one. Once you increase your account balance by $2,000, you've earned the right now to add your second one. And each time you add, based on the 2420 blueprint, that new contract will always be added with profit you earned in the market. It's a game changer. It's huge. It's not your savings. It's not a loan. It's not outside money. I said this in Telegram or somewhere, Twitter the other night. It's true. If you think about it, only 2 people in America have a license to print money. Jerome Powell and a trader. Think about it. You got goosebumps, didn't you? Good. All right, so we're back up into this area for resistance at a $500 move, or $5,000 if you're a 10 contract trader. And please, whatever you do, don't try to accelerate the program. Don't, well, I got some money in my account. Let me just go trade. Don't do it. Doesn't end well. If you do it the way I just explained, there's a high probability it can end well. So put the odds in your favor. Okay. Now, if we were to draw a trend line from up here, take it across there, would you say that's an important price, important area? I would. So we'll look for some resistance here. Now, if it sends us back down to the BBC, because we're on the north side of the BBC, then we're going to expect it to be good support. Here, we expect good resistance. Over here, good support. And then we'll just trade what's in front of us. If it breaks this trend line and holds a pullback, then this long trigger will be applicable. Now, if that happens, right, we make the move, we get above the long trigger, there are obstacles in your path. There's one, kind of a big rectangle, but there's 2, and there's another one. Size of the rectangle doesn't mean anything. I just can't draw straight. So we break the trend line, hold it on a pullback, trigger, clear sailing up to this obstacle. If you get through that obstacle, then you got to deal with this one. If you get through that one, then you got to deal with this one. Stages. When you see me put out an alert, like the one I just did on the ES, where it says something like 3080 to 3077 to 3073, I'm identifying those obstacles that are in your path. Okay. All right, Russell. Last night, we said to consider being short 1594. If you're not a partner or passport holder, I want you to think about what I just said. All of our traders got the same information last night on each of these markets. On the Russell, it was considered selling 1594. From 1594, we dropped to 1591. It's $150 per contract traded. Important prices, important areas. We get back above the trigger. And this time we drop to 87. So that's 7 points at $50 a point, $350 per contract traded. We get back above the trigger, run into a zone from last week, which we expect to be good resistance. And down we go. And we got a swing low at 1589. So that's a 5-point move at $50 per point, $250 per contract traded. And the long side of the Russell's 1603, and we've not seen that yet. Hey Valerie, did Michael ever succeed at getting locked in or anything?
He did not. He's contacting support.
Okay. Well then, John just jingled my phone, so I'll go ahead and open up his mic and we'll chat with him. And
Okay,
guys,
got it.
after we talk to John, I will pick up where we left off here on the Concierge Trade Alerts, and we'll do the Logic 247 as well. John, welcome to the show.
Hi, thanks very much.
How was your weekend?
Not too bad, thanks. It was a lot of things going on. So I'll get to that in a few minutes. I just want to talk about the markets a bit.
Sure.
You know, we did say back on Friday that there might be a strong finish, you know, a big rally into the close on Friday. And we actually had a pretty strong rally late in the day, right into the close. And the basically set new closing all-time highs. It wasn't new actual all-time highs. And then last night the market took a bit of a pullback. This morning, this pullback, was kind of a test of last week's, a little bit of a test. Not unusual to have a bit of a test after a very strong move.
Right.
And we are, it's a very impressive rebound, powered by Boeing. Apparently, they say that they might allow the fleet to be back in the air by December of this 737 MAX. So the stock is up gigantically actually. And I think this is going to push the Dow to a new all-time record high, possibly later today or the next day or so. However, I'm not sure if the NASDAQ or the S&P or anything else is going to be able to make a new all-time high, and I'd be a little bit careful since we're getting closer to Wednesday for a possible pullback, and also the way we pulled back overnight was a bit of it was a first sign of a bit of weakness. So you have to be fairly careful here. The gold got knocked down a little bit this morning, but there's some interesting things going on today. The gold made a lower low. The silver did not. That's actually pretty bullish. And the silver USLV is actually positive, and the gold stocks in general are positive. So and they didn't make a lower low today, which I think is actually quite significant. So when the gold stocks don't make a lower low and the gold does, that is usually a sign of a bottom. And in fact, if you look at the JNUG, I think you'll see that it's put in a kind of a little double bottom, and it actually looks quite good on the daily.
Yeah, I'm going to bring up a clean daily chart.
Yeah,
So
actually, it's better on the nugget. You've got two kind of doji days developing here, and we've actually seen this happen before a few times, where
hang on. There's the daily on the nugget.
Yeah, I mean, look at that. That's kind of telling. We just made a nominal new low. We didn't actually make a new low today. That's the point I was trying to make. And I think there's an outside day on the JNUG. So this, while it looks like it could go, definitely could go lower if there's a continuation, showing signs of a turn here. And if we are to, if we remember, these rallies tend to kind of run away to the upside pretty quickly. And this is actually potentially has a pretty interesting bottom in the making. We did make a slightly lower low on the JNUG, but we didn't take out this previous low in October. So that's quite interesting. Can you go back to the nugget again? Just have a look at that. Did you get that? Hello?
I hear you, John.
Oh, okay. Yeah. If you could just go back to the nugget, because I want to see whether it made a lower low than the October. If it did, that's quite an interesting divergence developing here. That could be just a ticket. So there's so much nonsense going on over these hearings that are coming up. I don't know whether people watched Steve Hilton Next Revolution last night, but he pretty much summed it up very, very succinctly. And really is just, you want to watch that first half hour of that show. It's just like mind-blowing what's going on. And it's, the market is completely, like right now is totally shrugging it off. But that doesn't mean to say that, we won't succumb to a pullback here in the next day or two. And in actual fact, the only thing that's actually going up today is the Dow. It's actually positive at the moment, is the Dow. Everything else is actually negative. So, it's making a rebound, but we're still off. Most issues, the TECL is higher. There's a couple of other things going on. This might create an opportunity here in the next few days. Maybe the cold weather. The grains kind of look like they were going to go on Friday, but they're slumping again. And the meal and everything. But the oats, I think the oats actually tends to go up when it's cold. And they're up very substantially today, the oats. Also, I think cocoa is... oh, that's okay, doing. Yeah, so cocoa is pushing towards new monthly highs, new possibly yearly highs, I think. Coffee pulled back a bit today, which can actually help cocoa. I was just commenting on the oats. The oats are up very, very sharply today. Sometimes that happens with the cold weather. I think that keep an eye on that, because sometimes it's a leading indicator of the rest of the grains. So it's possible maybe tomorrow we might get an upside turnaround, or later this week. The oats are very strong today. Oh, while you were there, could you go back to the nugget for a second while we're still there? NUGT. Yeah, look, that's very interesting. See, the nugget didn't make a lower low today, but it did make a lower low in the last couple of days against the October, and yet the JNUG didn't. And I think that's quite significant. So, we're potentially set up for a rally. We just got to, see which way the wind blows and if it's going to happen. Obviously, if it doesn't happen, we probably got some more downside to go. So it's kind of a risky trade. But knowing how this gold and silver sort of they often look like at the brink, and then they just reverse and take off. That's kind of what we've seen for the last few months. You have to be ready for something like that to occur. And if it's the beginning of a third wave to the upside in the metals, which could be, the upside might surprise actually the power of the upside. So, they're getting down. I mean, it was interesting because this morning, we just broke 40. We said we'd probably get back to 14.50 to test it. Just broke it by literally $1, and then the market turned pretty sharply. and you're putting in a kind of a gold here. So, and actually, that doesn't look too bad, that chart, Yeah, and if it does reverse, yeah, it's still a very powerful flag formation, and it could really really rocket out of here in a way that might surprise people, because you've got some CPIs and things coming out in the next few days. If they're anyway an upside surprise, that could power the market higher. So sure, no, yeah. So I was just saying about the Dow. We've got a potential. You got to be very careful this week, because it's interesting, because when the market sold off earlier on, the gold bounced. The gold reversed actually as soon as that happened. Yeah, I mean, it kind of looks like there's another little look. You're dealing with what Garrett showed us about a week ago. You're dealing with a possible breakout above a major uptrend line. Not the lower uptrend line, the higher uptrend line. That's usually a sign that you might go parabolic, and so you got to keep that in mind. And there's a few pretty smart guys out there. I think Jeffrey Sauter and Eddie Ardani. Eddie Ardani, he's a pretty good analyst. He's talking about a possible market melt up. And look, if this, I mean, if I were the Republicans, I think if they boycotted these hearings, they just didn't show up en masse, I don't think they could hold them. I think and I don't understand why the Senate isn't subpoenaing. They could easily use the power of the Senate to do a kind of a contra thing and a whole investigation of of all the stuff that's been going on to try and perpetuate this thing. So, and like I was saying earlier on, just when he went off, Steve Hilton on his show last night, the first half hour, I mean, this guy has got a real knack of just summing everything up and summarizing everything. Well, he's come a long way. He used to be and he's like a walk away. He used to be an advisor to Tony Blair over in England, so he sort of could definitely come from a good cloth, and he was mentioning yesterday that he came from behind the Iron Curtain, so he knows what I guess that's why he's living in the States right now. But he's certainly a very accomplished guy, and obviously having worked with people like Tony Blair, you've got to be pretty smart to be in that, working for the British government at that level.
He's really able to crystallize his thoughts beautifully.
Yeah, no, he's outstanding. He's amazing, and actually, he when he started this Swamp Watch and all that, he did go after a few Republicans initially, and I'm thinking to myself, God, they're going to get rid of this guy soon, but he's kind of stood the test of time, and he's being pretty fair to everybody, but he really tells it like it is. And I mean, it's like this Volcker guy, they've been subpoenaing all these other fellows. They don't want to have this guy on because he's gonna give the other side of the story, which is that there wasn't a quid pro quo and all this stuff. So it's kind of, you just got to watch the clip. It's long. You got to concentrate. There's about half an hour of it, the first half hour, where he goes through the whole thing. But boy, he really nailed it, and certainly I think it was spot on, as they said. So there was a couple of other things I was going to bring up, but I can't put my hand on them right now. Yeah, two things. First of all, Iran discovered a $53 billion oil field, a new discovery, 53 billion.
Oh, really?
Yeah, that's one of the largest oil discoveries ever. You know, that's a pretty big field, and
that's big for Iran.
Yeah, absolutely.
50 billion barrels.
Yeah. And then and then Trump, you know, I don't know when he put this out, but the FBI put out a $5 million reward for information about the Levinson, I think it is, the FBI agent who got kidnapped or disappeared in Iran. Mm-hmm. And initially Iran kind of came out, and Trump sort of upped the reward to 20 million for information, which was pretty noble of him. And, you know, this guy's gotten a lot of people out of distress and trouble. Not, you know, before he was even president, he saved a lot of people from all kinds of horrible things, stuck in prisons, you know, overseas, and he has done an unbelievable job getting people out of jail since he's been president. He doesn't get any credit for that. So he upped the ante on this, and so initially the Iranians sort of came out and said, "Oh, we have an open case on this guy," thinking that like he's in jail and they're still prosecuting him or something. But it seems like since the open case is on a missing person, so it doesn't look so good as he's still alive. I hope he is, but it's really a terrible, it's just a nauseating situation.
You know, John, I'm sorry, go ahead. Please finish.
And you'd think with, you know, this crazy deal that Obama did, that they would have, you know, gotten him back then. It's just terrible, you know, just negligence, the negligence of not being able to get an answer from these people. I mean, they couldn't give them the money quick enough, you know. I mean, you know, Trump said, look, if I'd been doing that deal, I would have paid him 10 billion a year, you know, for the next 15 years to make sure that they deliver and stay, you know, not do what they're doing right now. And that would have been a far better outcome, because what a lot of people don't realize is that 150 billion was actually Iran's money. It was frozen, you know, after the 1979, the hostage thing. Right. And it may have gone up with interest. There may have been some increase in, you know, they might have got some interest over the years, but it was, you know, they froze all the assets of Iran in the U.S. at the time, or probably worldwide. So there was a lot of money sitting there that unfortunately was given back to them, you know. And then, but the cash, you know, the 1.7 or 8 billion in cash, that was just like outrageous. And I mean, you can't get, you know, you can't get a billion or two to fix the border, and yet they, you know, squander it by sending it over to Iran. It's just it's unbelievable. Right. And you know,
these guys, John, these guys are broke, cash strapped, sanctioned to the hilt, and I find it real convenient that all of a sudden. A month ago, last month, they discovered a natural gas reserve worth 40 billion. And now, suddenly, this month, they find an oil field with 53 billion barrels of oil. It seems a little too coincidental. I say, show me the gas, show me the oil. I don't know that I'd buy it.
Yeah, look, you know, that's a huge discovery. If they haven't had a lot, you know,
two back to back. That's, you know, that's.
Yeah. The big discoveries.
Allah must
there
be
haven't been
smiling
any-
on him. I don't know.
Yeah, there haven't been any major oil discoveries for a long time, and but if it's true, it certainly gives them a lot of clout. And
But 53 billion barrels.
yeah,
It's 53 billion barrels. How
And-
many
and,
years of consumption is that?
well, especially over in the Middle East, the stuff never runs out. I mean, the reserves in Saudi have been 262 billion for like 10, probably 20, 30 years right now. Now, I think they might be just starting to see some decline in the big wells over there. But boy, that's been an unbelievable producer, just forever. And they can't max out anymore. I mean, they can't actually. I don't believe they can overtake the U.S. production right now, even if they maxed out. They're pretty much maxed out at the moment, and so I don't think they can really produce any more. By the way, that IPO of Aramco looks like it's set for December. So it's.
What is it, Aramco?
Yeah.
Aramco. It's funny. That's in a book.
What kind of book?
Aramco.
So we're
I'm not
probably
familiar with
going to rally. They're probably going to rally into that, into December. The market that tends to happen, and so. But often when you have a really, really big IPO like that, it can mark the top of a market. So it's something to keep in mind. The last big one was actually Baba. Baba was a big IPO, and I think that one marked the top of the market for the not just an interim top. So it might be the same with this one.
They have a 600-page prospectus.
You're probably going to see the oil price is probably gonna jump, with the winter and everything like that. So this. I mean, we've been said months and months ago we're going to have a brutally cold winter, and this is going to break a lot of records. This cold snap right now, so could be one of the coldest winters ever, according to some forecasts. And if that's the case, remember from late, usually by mid-December, the oil actually a smarter time to do this IPO probably would have been sometime around April, May, around Memorial Day, because the market always tends to rally into Memorial Day. So, but they're going to do it in December. So maybe they need the money. The oil is fairly firm today. The market is definitely it's really putting on quite an impressive show today. One thing you have to be careful is when you do get a day like today where you open down and then you rally up. If we roll over from here, that would be a problem. So
yeah, I talked about that at the open of the show. We're coming up on potentially good resistance here on the S&P. If we sell off into the close today, that could be the start of something bigger.
Yeah,
this high-level consolidation. Here's the daily chart on the S&P, and that measured move we talked about from this all-time historic high to this all-time historic high. A measured move puts us right where we've been for the last 3 days, so it's kind of make or break here.
Yeah. Also on the TVIX, you probably would want to watch the 8.25 level, somewhere like that, 8.3. Right now it's making new lows, so that's pretty bullish for the market. But we've also seen a pretty steep uptrend there that you just had up on the chart. So if that thing breaks, you really could see a pretty fast down move.
Let's look at that TVIX. There we go.
Yeah, it's not ready to go yet, but just obviously these 2 red days, getting above those would be could be a turn, an upturn, and that defined trend line on the S&P is definitely something you got to be real careful of. Can you put up Newmont, NEM?
Sure. There we go. That's daily.
Yeah, I mean, look, we've seen this before with Newmont. It kind of looks. I mean, look at the time when it bottomed in May, and had a few green days, and then it sort of took off with a vengeance, and it's sort of looking like the same again. And you've got this, test of this previous low. I think Newmont, if it decides to go, could really move big out of here. Also, look at RGLD.
Oh, Frederick had asked me, what are your thoughts on Bloomberg entering the
Oh, that was the other thing I was going to comment on. Yeah, look, I wouldn't, I wouldn't belittle him. Just like Trump did.
I don't know much about him, honestly.
Yeah, no, he's an incredibly accomplished guy. He's somebody you definitely don't want to. I mean, look, he got fired by some firm like kind of like Morgan Stanley or somebody like that. Fired him, and then he went out and started Bloomberg. So
they get a lot of money for those terminals. Have you ever sat at a Bloomberg terminal?
Yeah, well, look, it's funny because I was actually talking to somebody else about this. I think the internet is going to disrupt Bloomberg. It's because the information
single terminal is $24,000 a year.
We're on the terminal, aren't we?
On Bloomberg, no.
So Bloomberg definitely does a lot of things that nobody else can do. But there used to be the forerunner of Bloomberg was something like I think it was called Telerate, and it was a formidable thing. It had thousands of installations around the world, and I think I actually use the same charts that are on Bloomberg. They just a provider to Bloomberg, but Telerate kind of it's kind of like Yahoo and Google. One day Google was the
what's it called, John? Telerate?
I think it was called Telerate. Yeah.
Telerate, a U.S. company providing financial data to market participants specializing in commercial paper and bond prices.
Right. So they disappeared, or they were sort of eclipsed by Bloomberg, and I think somebody's going to come. Well, I just think that.
Well, there is a competitor out there. I think that's who Michael was referring to a moment ago. We were going to do business with them a while back, and then something went sideways. Bloomberg Terminal Competition. I can't remember the name of that company.
I'm pretty sure we put something on there.
Well, not on Bloomberg, on Bloomberg's competition.
Well, look,
the new company that was going to take over, they were going to eat Bloomberg's lunch. That was their pitch to us.
I think the brokers themselves are going to provide, similar services more and more. The brokers are putting out more and more charting things and information and everything else, and I think they're going to take away from Bloomberg. I mean, look, Bloomberg is it's got a lock on most of the institutions because it's almost mandatory to have a Bloomberg if you're an institution, and for an institution it's not that pricey, I guess, but there's as I mentioned recently, there's some things that I'm working on right now that really, compared to what I'm paying for other services, is just like a fraction of the cost, and that's quite a big deal. I think these people who've been getting fat on having fancy software and all the things that you need for years are probably going to start losing subscribers because of the ability to get it elsewhere for much cheaper price.
Well, this company, the platform that they had, the ones that approached us and wanted to do business with us, it was a very credible and very impressive platform they put together. But I've gone through 2 websites now of Bloomberg alternatives, and none of these names ring a bell. So I don't know if they're still in business or not. I'm sure I could go through some paperwork and find their name, but I thought they would just pop right to the top, but I don't see them. Oh, there it is, right there. Money.net. Have you seen this?
No, I haven't.
That's what it was. Money.net.
Mm-hmm.
It was on a Bloomberg terminal.
No, it was a competitor to the Bloomberg terminal. Bloomberg is a separate company. This company wanted to be Bloomberg's competition. They wanted to get on every broker's desk in America. That was their pitch. What all they? Yeah, they probably forgot me by now. Take a free trial.
Just scroll down a bit, or see what.
Oh yeah, sure. I'll back it up. I'll have it running tomorrow. Yeah, this is what it looks like.
Oh, it's got a lot of stuff.
Yeah, it looks. It's got chat, and it's got programming, and it's got videos, and it's got earnings calls. Yeah. Huh. I wonder if my old login still works. I'll try. Nope. Okay, so I'll have to go through the free trial process. But we were listed on their platform. I forget what they hooked. We were linked up to, I think, a trial to our training room or something.
Yeah. We were on there somewhere. I'm sorry. And I remember you mentioning Bloomberg. That's why it just kept coming back to me.
Mm-hmm. John, anything else you want to look at?
No, thanks very much. Great to be on and see how things are tomorrow.
Is Santa Fe get your financials out yet?
They're, I think, any minute now, any very, very close, maybe a day or two, something like that. So,
okay. All right.
Yeah, that could be a big deal. So, thanks very much.
Talk to you tomorrow.
Bye.
Okay. All right, guys, we will finish up the alerts. I'm going to sign up for this trial.
Okay.
If it's not too.
Well, let me just say what happened with me because
I didn't.
Normally I have to
didn't
recap of the recap.
Yeah, I didn't think you were going to do it, but if you want to grab the charts or something, go right ahead.
Now, well, I mean, all my stuff that I drew is gone.
Okay.
So I'll just say today, our first trade, 7 minutes, one trade, $100 a contract on crude oil. We took 2 trades on crude, 5 on gold. We ended up with a plus 11 on gold, and we took 1 trade on the ES. That was the morning session. Okay. So there was activity, but I mean, it happened in spurts. And on crude oil, particularly on crude, my favorite market, we missed 4 trades that were each probably 10, 20 tick trades. And yeah, I mean, today was a great day on crude. Last week on Friday, I said, look at the 57.5 calls. At that time, they were $410 a contract. Today, they were at $680 a contract. But on Friday, at the end of the day on Friday, they were much better than that. But keep that in mind. 57.14 is where the market's trying to get to. Okay.
I'm sorry. It's trying to do what?
It's trying to get to 57.14.
Okay. It's at 57.05 right now. Got a last week zone at 05.10. And nothing above that up to 90.95. We'll see if we find resistance here. We poked above that zone just as we did back on Friday. But if this thing triggers again, I mean, that's a possibility. The long side of that was 57.25. So we did trigger the long side last night or this morning, just barely. We triggered twice on the short side last night after the Globex Open. We had a $330 per contract move. We got back above the trigger. And then we dropped $550 per contract. Back above the trigger, remember, it's 2 lines in the sand. Everything between those 2 lines is the market trying to make up its mind. And we popped up to 33. So from 25 to 33, to about an $80 per contract move. And now just rolling sideways, market making up its mind. So we've
making up its mind.
Covered the S&P. We've covered the Dow. Okay, remember the talk we had about if we broke that trend line? Hey, there's the trigger overhead. There's the long trigger. We triggered on the short side right here last night. We had a beautiful $500 per contract move. Bounced up to resistance at the BVC. Dropped again to where we expect good support, the weekly zone. Now we've taken out this trend line. We did the Trader Vic, came back on this next candle and touched the top of it after we broke through it. So on this trigger, your first obstacle, in fact, we'll make this a radio freebie. We'll go 27,670. 27,670 to 27,670. Go 670 to just we'll go 690 and then trail if possible. There you go. Alright, so we got a radio freebie on the S&P and one on the that's a a short on the S&P and a long on the Dow. High probability one of the two will trigger, so we'll see what happens. We're getting some initial resistance right here at the trigger on the long side. That's why I bumped, that's why I said even though the Concierge is at 660, at this point in the game I like 670 a little bit better. Obstacle, obstacle, obstacle. Alright, we covered the Russell. Consider being short 1594. That happened. Took us down to, well, the first one took us to 91. So that's a $150 per contract move. And then the second one took us down to 87. So that's a $350 per contract move. Not only do partners and passport holders, or not only do passport holders have access to these alerts, both the Concierge and the Logic 247, once they get themselves into a trade, into a position, more importantly into a situation, they almost always have someone in the Telegram channel that they can turn to, talk with, and help make sense of. And that's worth whatever it's worth to you, basically. All right, I didn't count this trigger. This trigger took us down to 89, so that's a $250 per contract move. Who is this getting out of the car in front of my place? My establishment. Oh, that's little D. That's a,
Establishment.
that's little D getting in the car. He's going to visit somebody. Oh, okay. Okay, I'll have him on the show later this week, and Agnes too. So this was a 250. Okay. All right, so that's the Russell. Now, another thing, I think sometimes folks, when you see Michael's charts in the morning in the live training room, and you go, "Wow, that's a lot of markets. I don't think I can watch all that." Or then perhaps you take a look at the Concierge, which is 8 markets, and Logic, which is basically all future markets, all futures markets. You don't have to worry about sensory overload because you take what you can use and you leave the rest. If you're just learning how to trade, Michael and I both are going to suggest that you focus in on 1, maybe 2 markets, okay, and just work with those until you get the hang of things, until you start to see the rhythm of the market, hear the rhythm of the market.
And you know, it's right there, right in front of you, every day, every single day. It's right there in front of you. And, you know, if you don't get it, let us know. Let us know. And we will take care of that. We'll try to fill that gap. But it's right there, right in front of you, every single day. I mean, it does the same thing every day. So, think about that.
Maybe coming up on trigger number 4, guys. Here on the Russell, let's look at the NQ. See what happened there last night. Okay, these are all last week zones. And I was lazy on Thursday. I think I just put 1 line for each of them, but you get the idea. NQ last night, considering short, 82.35. Okay. 82.35. Yep, 82.35. So the first drop took us to 21. It's $200 per contract traded. And then we get back above the trigger. Important prices, important areas. Almost always tested. And so that drop took us down to 82.13. So let's see, that's 35. That's this is a $400 per contract move. And now we'll just wait and see if the market is going to hand us another trigger. Short side, oh wait, that was a short side. The long side is 82.67. So we've not seen that yet in this session. But we could. All right. Only one left is gold. Let's take a peek at that. And then we'll look at the Logic 247 real quick. Last night's gold, consider being short, 14.58. Looks like we're coming up on a potential second trigger here. 14.58 down to 49. That's a $900 per contract move. Now let's do this. That question that Vic asked early on in the show about, you know, do you enter right at that number, 14.58? Well, the number is the number. So, but let me show you the same thing I showed you on the S&P earlier. So let me just note that. 14.58.
Is Vic out here? That's just, yep, Vic is.
Well, yeah, we were just, I was just chatting with him here a couple minutes ago.
Okay, good.
Yeah, thanks. Okay, so now we'll go to the 5-minute. We'll get rid of all our drawing objects. If you're on DT Pro and you don't know how to make it all go away, just come over here, select all, hit the delete key, and everything will go except your indicators, any drawing objects that you have on. So GGCZ 19, and the number was 14.58. Now, in this instance, unlike the S&P, where it gave us a beautiful entry, we just barely triggered, pulled back up to the BBC, and then triggered a second time. We don't have that on the 5-minute. So now what we'll do is we'll drop to the 4-tick range, and we'll see if we got it there. Chances are we did. Almost always do. Okay. Yep. Okay, we come down, we touch the trigger, we catch a little bounce, and those of you that have spent any time at all in the live training room in the mornings with Michael and Valerie, then you know exactly what that is, what I just did. Let me open it up so you can see it a little better. Come on now. There. So we come down, we touch the trigger, bounce, and then that trend line's broken. So the rules from the live training room is a close below the trend line, enter on the open of the next candle, minus 1 tick. And that would have got you in. Well, at this point, you could have taken the trigger number or just from the trade setup. So it opened at 1458.1 minus 1 tick puts you right at 1458, the number. So okay, if we come back over here now and we trigger again, the same dynamic that we discussed on the S&P is going to be in place. If we over here, when we popped up, this is bearish. Okay, price is below the BBC. Bull bear cross. No matter what time frame or market, if price is below the green line, we anticipate lower prices. The narrative changes when price gets above the green line. Bullish, bearish. So over here, so this is a perfect scenario for going short. But now, if price pops up above and gives us an immediate trigger, we have to expect that BBC to continue to be good support. You see, it's good support here on the pullback, good support here on the pullback, and here, and here. So just because we get above the trigger, it won't take away that dynamic. You have to expect, if we pop up and come back down, support. Once we get on the other side of the BBC, that's it's a horse of a different color. In fact, let's do this. Let's go back to a 5. Let's go back and look at that ES that we were talking about earlier. Let's look at that one more time real quick. And thank you for bringing up that question, Vic, because it gave me an opportunity to hopefully explain this. All right. Now the zone is at 86.87. So I'll drop a line here at 86. There's 87. Okay. 87, 86. When we initially triggered last night over here in the S&P, we're coming down. We're below the green line, which means we anticipate lower prices. So getting short at last night's number of 30.82, well, that was splendiferous, I think they call it. Now, I did this already, but I'm doing it again because it's really important. Everyone who has access to these alerts, it's just really important that you understand this concept. We're below the BBC. We anticipate lower prices. So on the first trigger, you could have taken the first trigger. You could have taken this trigger, for that matter. But each time we pull up the BBC, we get another leg down. Pull up, leg down. Pull up, leg down. Now, that won't go on forever. again down here, the narrative changes really on that candle right there. Let me open it up. You get a little doji, it represents indecision. And when this green candle comes ripping up out of here, that's the London Open, 3 a.m. Eastern. So when we take out that high, we now anticipate higher prices. Takes us right up above the trigger. We get below the CFMA one, come down through the trigger, but this is different than this. This is conducive to a nice trade. This is not, because we have to expect this to be good support now. And it was, in kind of a weird way. We popped up, touched the trigger. You still got to be thinking support, narrative changes, leg, retracement to the BBC, enter on the open of the next candle, -1 tick. And that would be 30.79 1/4. Okay. So from 79 1/4, we ultimately wound our way down to 77, 75. And that zone from last week is at 72.73. So that's the 5-minute we just looked at. Now let's look at it from the 30-minute perspective with the indicators on. Hey, Michael, if I give you the code for a 30-minute BBC, can you pop it into the indicator set?
And 30-minute BBC? Yeah.
Yeah. Yeah, I'll show you what it looks like.
Okay. You don't even have to give me the code. I can just pop it in.
Okay. All right. Yeah. Okay. So if it's that simple, then that'd be great, because I'll show you how it looks. Let me find one of my charts here. Here we go. This one will work. Okay. This is a 5-minute chart. S&P 500, Emini Futures. These are weekly trading zones up from last week. This is a 30-minute BBC on a 5-minute chart. See, right now the 30-minute BBC is at 30.86. 30-minute chart BBC. Oh wait, that's off. What happened? What did I do? That's 30.82. That's 30.82. Oh yeah, I'm sorry. 30.82. I don't know why I said 30.86. It's because there's an 86 there. But watch the number in the column. It's 30.82.
Valerie, are you there?
It's 30.82.
Yes, I am.
Okay. Sorry, Dwayne. I don't want to break your mojo.
Oh no, go ahead. If you need to talk to Valerie, go ahead.
Can you send the videos of applying the weekly trading zones to Bob Z?
Absolutely.
Thank you.
Do it right now.
Thank you. Okay. So here's the idea, guys. We've always taught you about multiple time frames. Markets are fractal in nature. Everything that happens in one time frame, happens in any time frame. A 1 minute and a monthly. The only difference is the magnification, so to speak. Okay. If you ever want to learn more about that, let me know, and we'll do a mentoring session. So knowing here now on a 5-minute chart, when price pulls back to the BBC, we expect it to be good support, even on a 5-minute. But this is a 5-minute BBC. So we're just simply overlaying a 30-minute BBC on a 5-minute chart. Now, there's no magic or anything. It just saves you from having to look here to see where. See, this is what I would call the BBC on the 5-minute. I call that minor support. Okay. The 30-minute BBC, as you all know, that's my go-to chart. And there are no magic time frames. Not a 4-tick range, not a 30-minute. The only magic in any time frame is the magic you bring because you've watched it and worked with it enough time that you see and hear the rhythm of the market in that time frame. No matter what market you're in, no matter what time frame you're in, the clock on the wall is always price. So just being able to see it all at one glance, to see that, if price gets through there, and lots of people watch a 5-minute chart, intraday S&P traders, lots of people watching that 5-minute. So as price sails through here, you're just waiting, Now, well, should I short it from here to here? You could. I mean, that's a valid trade. It's Aaron from Creative.
That's not. I was going to say that's not me.
No, that was Aaron from Creative. Valerie, I don't know if you ever spoke to him or not, but if you did, you can let me know whatever you guys talked about. Okay, so does everybody understand this? Okay, Michael says he can do it just real simply. And if you can, Michael, I guess make it user definable, because
Yeah, well, what I was
maybe
going to do is make
someone-
it an on-off switch.
Okay.
I can add it to the existing BBC, but the problem is we have to define the time frame, because with range bars, there's no time frame associated with it.
Right.
But if you're talking about a 5-minute chart, then we're going to go 6 times 5 minutes. And I can do that.
Yeah, the code in TradingView is real simple. It just it's in one line. When you tell it to run it, the BBC, you just define 30, 60, 240. Oh, which brings up another point. I don't think I have it on this chart, but what I also use, guys, on my TradingView charts, I don't think I loaded it on this one. Oh yeah, I did. Okay, I'll show it to you.
You showed.
Here we go. We have the 5-minute BBC. We have the 30-minute BBC. And then right here, we have the 4-hour. Right there, 4-hour. So, I don't think if you want to, if it's simple, and if it's an on-off switch, so people can use it or not use it, it'd be cool to have it in there. If you need that snippet of code that I have for TradingView, I'll drop it to you in Telegram.
It's not going to work in DT Pro.
No. You'll have to convert it to DT Pro language, but it's just one line. So,
yeah.
In fact, I've got a thing. I can convert it if you need me to.
It's not a big deal.
Okay. All right, guys. We've covered the S&P, the Dow, Russell, the NQ, crude, gold. I think we've done it all. Well, let's look at the Logic 247, and then we'll scoot on out of here. Let's see. Valerie sent me
I want to hear the word for the day
this morning. Okay. Let's see.
I went to Baptist church yesterday.
Did you have a good time?
I did. It was, well, yeah. I don't know if you heard, I don't think you were in there this morning when I said that Jada and I were called up twice. Once because we were new. It's the first time I've ever been to Baptist church. And the second time because I'm a veteran.
Thank you for your service. Okay. All right. Here we go. Stand by. Still checking. Where's that, Valerie? I know you sent it to me. I just saw it. Standing here reading other stuff. I'm trying to do a radio show. Valerie, where'd you put it? I know you sent it to me.
I put it in your Telegram channel.
There you are. Yeah, I found it. Okay.
Okay.
There was another channel with your picture, and I kept clicking on the wrong one. Okay, guys, so here's what's happened since the open last night, Sunday night, the Lovex Open. We are in week 67. I'll look at week 66 in a minute. So far, since 6 p.m. Eastern last night, we've had 10 total alerts. 2 are still in the works. It gives us 8 actionable so far. One of them got stopped out. So 13% have been stopped out so far this week. Last week was our second worst week ever. We've had 1 week that was 30%. Let me just go look. All right, so this is this week so far, and we'll look at the individual ones in a second.
Last week was like 20%.
No, it was higher than that last week. It was our second worst week ever. So let me just go find it. There it is. Okie doke. So last week, week 66, here's what happened. 37 total
29%.
3 never triggered. They gave us 34 actionable alerts. 10 of them got stopped out. 29%. Now, so 29% last week, and then I think it's 2 weeks back. We had week 65 was 14%. And week 64 was 9. So I think it's going to be this next one up. I think we hit 30%. But I always say the pendulum swings both ways. That's why when we have a week of 0% or 10%, I have to remind you that the average is 20%, and the pendulum it's gonna correct itself. It's gonna average itself out. So yeah, here we go. Week 63.
See, and
yeah, go ahead.
Dwayne talks about it, that 31%. And Dwayne, and I mean, 31% is acceptable.
Yeah, it's not bad. It's just the worst bad
great.
we've had.
I mean, you win in 1 out of 3 trades. I mean, 3 out of yeah, no, 1 out of 3, right?
Right.
No, but
3 out of 10.
3 out of 10. We'll say that. But you got to keep it all in perspective.
Well, I mean, 3 out of 10 when you stopped out. So
yeah,
basically, it's a 70%.
And you got to keep it all in perspective. When you look at this stuff, Dwayne is publishing everything right here so you can see everything, so it passes the NFA rules. But there's a lot of stuff that they have that says you can't say I have 80% or I have 20%. Dwayne's talking about the losses. He's not talking about the wins.
Here's what I do, guys. The wording with TFA is you can say that you. I mean, there's that. There's so many places. The one I'm not even going to call their name, but for years they've advertised a 98% win rate, which is ridiculous. But in their fine print, they just yeah. The real reason I could be clever like them with the wording. But I just wanted to do something different, and I don't want to lull people into some false sense of complacency. So instead of talking about how many profitable trades we had, let's just deal with the elephant in the room. How many were stopped out? And that's really what you want to know, isn't it? So it sounds better to say, 80%, 80% profitability. Well, that sounds better than 20% failure rate. But we don't consider it a failure. A stopped out trade is not a failure.
A trade.
It's not a mistake.
It's just a trade.
Yeah, it's the business. It's the business. I mean,
and if 20%, that's 2 out of 10. If you lose on 2 out of 10, you lose money. Then you make money on 8 out of 10. So, I mean, you got to keep it all in perspective. It's just the business. The cost of doing business.
We didn't have much of a gap last night. I mean, hardly any, I don't think.
No, not at all.
So,
not at all. I was looking for it.
We had an S&P short. We have a Dow that hasn't triggered. Wait a minute. Maybe Valerie gave me this recap before the show started. So the logic number is 27,660. So yeah, we're sitting right at the trigger.
And that's where we are right this very moment.
Right this very moment in time. And then we've got a Russell 02 to 04. So that's going to be way up here. So I don't foresee that happening this session. But hey, anything can happen. So all right, and then we go back to the NQ. There's a short. Long on crude. short on gold, short on the S&P, short on the Dow, short on the NQ, and then this short on crude. The second trigger, that's where Joel had a question this morning. He said, hey, that crude looked good to me. Why does it have a red X? And I said, ask Valerie. And then I went and looked at it myself and saw that on the initial trigger, it just didn't go the distance. In fact, let's look at it. Here we go. So that trigger, 56.60, no, 50, 56.50, that happened right here. 56.50. Okay. Now, it triggered 56.50 and it dropped to 47. That's a $30 per contract move. Now, yes, it ultimately did, do what we expected it to do and all that jazz. But before it went to the target, it made a run in the other direction. The spike there was 89. So an entry at 56.50, the drawdown, 39 ticks, $390 per contract traded. And on Concierge and Logic, we don't like to risk more than $300 per contract per trade to find out if our analysis is valid. Rather than risk more than $300 per contract per trade, we'll simply wait for a second trigger. And that's what Valerie noted on the recap, is that on the second trigger, it ran the distance. It went from 56.50 to 56.40, and you were able to trail it. And the low again was 25, so $250 per contract traded. So Logic gave us a $300 move, a $500 move. Concierge gave us $330 and $550. Logic 247 gave us a stop out and then a $250 per contract move. Okay, that's the deal. All right, we're heading into the good word for the day. Oh, we didn't look at bonds today. We've been looking at bonds lately, so let's go ahead and take a quick look. Bonds pay $31.25 per tick. It's 32 ticks to a point. And if you're just learning how to trade, bonds are probably not the best place to get started. Lots of people trade them. Some people, that's all they trade. It's what they do. It's who they are. Bond traders. All right. So the Concierge last night for bonds. Consider being short 156. Never got there. Flip side, considering long, 156.22. So that's going to be right here. Come on. There we go. 156.22. So from 22, we made it up to 28. So that's 6 ticks at 31.25 per tick. Alexa, 6 times 31.25.
6 times 3,125 is 18,750.
All right, so it's $180 per contract move. Got back below the trigger, did another $180 per contract. Then we got back below the trigger and did a third $180 per contract move. And again, the short side is way down at 156. Okay. All right. Good word for the day. If you have any final questions about anything, please put them in the chat box. I haven't looked in a while, so let me see. Question. Did you already answer that question, Michael, or did the BBC time frame changes? The BBC time frame changer. Will it work on Ninja 7? Oh, yeah. Yeah, I don't see why it wouldn't. Let's see. It looks like there's a bunch of stuff in the chat box. I think mostly comments, but guys, if you ask a question and it didn't get answered, please just copy and paste it back into the box so that I'll see it and be sure and get you an answer. Bruce, I see your comment. Yeah, for me, those patterns, when they don't play out clearly and with symmetry, I consider it a negated. So that head and shoulders that we talked about earlier, folks, on gold, I've had a couple people tell me that, they still recognize that as a head and shoulders pattern, and that's completely valid. It comes down to a matter of personal preference, and it's semantics. The neckline's still there. And the trade that I gave you last week on the show here, that's still in play. So, okay. Now I'm looking at this question box. Okay, I think I got lost, Joseph, on your question. One tick profit, right? I'm not sure which one you were referring to. All right, so guys, again, copy and paste if you have a question that didn't get answered. Oh, Joseph, I got you. Joseph, he was referring to the service that has the 98% winners. Yeah. That puzzles me. I mean, if someone is obviously trying to mislead you before you even become a client, well, I guess that's the whole idea, They're going to see how naive you are, because like if they'll buy this 98% garbage, they'll buy anything. We'll milk them real good. Damn, that's just sick and sinister. And it doesn't have to be that way. There's plenty of money in the world. It may not be in your pocket at the moment, or mine, but there's plenty of money to go around. There's no shortage of cash or digits and decimal points in a computer. I mean, plenty to go around. The distribution, yeah, well, I mean, that's part of this whole political hot potato that's being tossed around today. The government wants to get in your pocket and redistribute your wealth. The money that you worked real hard for. And maybe you cut out pizzas 2 Fridays a month so that you could save a little more, and then you did something savvy or smart with the money you saved. Maybe you launched a small business. Maybe you schlepped down to the Park and Swap every Saturday morning for 10 years, selling some kind of cheap plastic stuff from somewhere, and you saved that money. And you feel pretty good about it. And you should feel darn good about it. And then they're going to put their hand in your pocket and go, well, yeah, John, you did real good. And Steve and Billy Bob and whoever who were laying up on the couch watching Springer while you were doing all that great stuff, they wanted me to say thank you. And that's pretty twisted. Oh, and by the way, Epstein did not kill himself. So, just saying. Okay, good word for the day. I promised it. I'm going to deliver. Giddy up. We're still looking for good resistance here. If we start heading back down, personally, I won't wait for 3082. I'll probably be good to go at 3084. And I'll probably put out a logic alert to go along with that. All right. Backsliding, that's a term from my youth. I used to hear it all the time. Small town in Georgia, folks didn't have a whole lot to talk about. But gossip and backbiting and stuff, yeah, that was alive and well in the church. Now, did you hear about Mr. Johnson? Oh, what? He backslid. Whoa, he did not. Oh, yeah. His car was parked in front of Miss Davis's house at 8 in the morning. Well, you know, he is a plumber. Oh, yeah, but I don't think he goes to work that. You know, it goes on. But anyway, have you ever backslid? Now, that term doesn't get used a lot today, but we all know what it means. Have you strayed? Have you wandered off? I was raised in a Christian home by my grandmother and my mother. And even though I understood everything there was to understand, or as much as a young man can understand about the things of God, at 18, I decided to take a journey. It lasted 20 years. And I was much like the prodigal son, you know, except I didn't have any inheritance or anything. I wasn't out spending Dad's money, but I was caught up in all the foolishness. Luke 15:20. And he arose and came to his father, but when he was still a great way off, his father saw him and had compassion, and ran and fell on his neck and kissed him. Hey, Valerie, can you ask, what's his name? Stop calling me.
Okay.
Aaron at Creative. Yeah, he's a nice guy, and I'm not against talking to him, but he calls a lot. I think I'm on an automated dialer or something, so that's okay. Anyway, I saw a note that you were going to speak to him the other day, did you?
Actually, I didn't, because I didn't know if you wanted to proceed or what you wanted to do in that area.
You know, you guys didn't seem too keen on it, so I'll if you and Michael want to give it a try for a month, we can. If not, that's okay. Okay, so back to Luke 15:20. And he arose and came to his father, but when he was still a great way off, his father saw him and had compassion and ran and fell on his neck and kissed him. The Bible says concerning this prodigal son, the father, you know, if you read more in the scripture, it's the father every day would go down the driveway to the gate and look off into the distance. I understand the father side of this, and I understand the son side of it. As I just explained, I was the son without an inheritance, but I've also been the father. I didn't really talk about this on the radio show when it was happening, but my 17-year-old son decided to go on the road for a couple months. He ran away, and it was tough, man. It was so hard, and he was just, you know, he was being 17, and anyway, I would go out in the mornings, the afternoons, evenings, 3 a.m. in the morning when I couldn't sleep. And I would look, and because there had been sightings, we knew that he hadn't strayed far. It wasn't like he, you know, ran away to Hollywood or New York City. He was we live at one of the largest nature preserves in America. So, you know, he was Daniel Boone, Davy Crockett for a while. But I would go out at night and I would look, and sometimes I would walk through my neighborhood, even up by the mountain. Gabe. And I just knew he was crouched in some tree somewhere watching me. You know, he kind of thinks he's a special forces, but he hasn't been to boot camp yet. Anyway, so I understand the son and the father in this story about the prodigal son. Now, the truth is, you're not beyond the reach of God's grace, so your future can be greater than your past. When he was a great way off, when the son was still out there, the father ran to the son. Now, something that I'm trying to teach my son to do now is when trouble comes knocking, and it always does, you don't run from God, you run to God. I'm also trying to teach him that when he finds himself in trouble, I don't want him saying, oh man, my dad's going to kill me. I want him to instinctively grab a phone from one of his knucklehead friends and go, give me that phone, I'll call my dad. He'll know what to do. So it's a work in progress. Now, the relationship with his son wasn't based on performance, but he'd given him life and brought him into the family. Think about the significance of the things the prodigal received that day. Number one, the robe. That confirmed his identity as a son. This is 2 Corinthians 5:18 through 21. God doesn't see you in your weakness. He sees you clothed in the righteousness of Christ. Now, it might take a minute to get your brain wrapped around that. Yeah, I know it does for me. But it's true. It's the Word. It's in the book. You believe it all or you believe none of it. So we know that there was a ring and a robe and a fat calf. The ring, this was a signet ring with the family seal on it. This gave the son back his authority that he had thrown away. He was now able to do business in his father's name. Just a couple days previous, he was wallowing with the hogs, eating what the pigs ate wherever he found a job. And that's when he came to his senses and said, oh my goodness, even the pigs at my dad's place are doing better than me. So in just a short span of time, he comes home, he's coming home, he doesn't know what's going to happen. Is dad going to kill him or what? Dad runs to meet him, puts a robe on him, gives him the signet ring so he can transact business in the family name. I hope you see the parallel there between the father of the prodigal, God, and you. When you come before him with a broken and contrite heart, not only is he going to forgive you for whatever foolishness you've done, he's going to authorize you to do business in his name. There were shoes, sandals, Jesus shoes, I call them. Now I wear flip-flops, but those Roman sandals, just not for me. Personal preference. And definitely not with black socks. That's always a little funny. Okay. Household servants didn't wear shoes. Did you know this? Back in this day, household servants wore no shoes. Only family members got shoes. Now the son returned home thinking that the best he could possibly hope for was a job in the servants' quarters. But his father not only restored his identity and his authority, he restored him to full sonship in the family. Sonship. It's a word. Look it up. And once he had his robe and his ring and his shoes, Dad threw a party. Back then, when you rebelled against your father's authority and left home, they conducted what was called a ceremony of shame. Wah, wah. Which meant you could never return. You were cut off. But not this father. Not the one in the story we read. No. This father threw him a party. What was the point? Because Jesus took our shame. For God made Christ, who never sinned, to be the offering for our sin, so that we could be made right with God through Christ Jesus. 2 Corinthians 5:21. So a good word for you for today is this. No matter how far you've wandered, no matter how far back you've slid, you can come home today. Don't put it off. Don't delay, because we don't know what tomorrow will bring. We don't know what the next 5 minutes will bring. But right here, right now, the door is open. It's open. And as soon as he catches sight of you heading home, I dare say he may rush out and run down the street to meet you. That's the God we serve. The God of second chances and more. But let me caution you, don't wear out the welcome on that. I know that it says that he'll always forgive you. If you're serious, if you're just running a game, guess what? He knows. When you have a broken and contrite spirit, when you're serious, when you mean business, he knows that too. But we should all be careful not to press our luck too many times on that. Because there could be some bust just lurking around the corner. God forbid. Right? So, good word for the day. Come back to God. Come home, son. Come home. All right. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell. Could we insert some awkward silence here, please? No? Come on. Be a guy. You can do it. Oh, I forgot to open the mic. What do you know? All right. We're going to do this one more time. I think I've done it 3 times already. There it is.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any securities. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.